Okay, what we're going to do today is just our basic strategy application session. So we'll go through the markets, find some trading opportunities, look at the trading opportunities some of them that we went over last time, and and go from there. And I'll try to do it again in a very educational way. So don't want to make sure that you're not just handed opportunities, but that you learn to do this as well. Make sense? Okay, let's begin. We are looking at the British pound here. A couple things on the pound. Yeah, let me try to make it a little louder here. Hang on a second. Is that better? No, let me try this. It should be a little better. The volume adjusts itself. That's the weird thing, but I think we're okay. I'll talk louder also. So, very big picture. The obvious opportunity in the bigger picture. Now we're not close to this yet, but you never know. If this opportunity comes up before we're together next, that's one I certainly wouldn't want to miss. So with the dollar having some really nice demand zones on the larger time frame, that's the daily chart we're looking at. And then take a look at these beautiful supply zones in the pound. See that? Especially, well, both of them are nice. So again, for longer term opportunities, here are two that are just, to me, look really nice. There, I'll adjust these lines for you. And again, I know these are not close today, but if these should happen to meet entry before we're together next, I wouldn't want you to miss them. Okay. So dollar into demand, pound into supply. Make sense? Actually, the pound is not that far now that I look at this. You're 50 ticks away. Well, not anymore, but we were a little bit earlier. And I would say, let's look at this too. So let's say that the pound reaches one of these supply zones, but the dollar's not at demand, because that's probably what's going to happen here, right? Let's go down to a smaller time frame. Had a little connection issue. Everybody still here okay? You should be able to. Can't. Are we back? Can you hear me again? I think we had a little disruption in the connection, but it should be good. Yeah, no? Okay, good. Excellent. Yeah, I saw the connection went out literally for a second or two. You have to catch that on the corner of my eye there. But I think we're back. So what I was saying was, what's likely to happen is the pound is likely to hit supply before the dollar even gets close to those demand zones. So when we come down to the 60-minute chart, by the way, you've got some supply above in the dollar, but come down to the 60-minute chart, we do have some fresh demand right here that comes in at 94.35 down to 94.25. Okay, there's actually a couple levels on top of each other here. So we'd want to actually do it just like this. Section brings it down more to, I'm going to think it's 94.20. Let's see. Yeah, about 94, call it 15 to be safe, 15 to 35. All right, so watch for that correlation, okay? Pound into supply, dollar into demand. Because again, if the pound does reach that supply, I highly doubt that the dollar will be down in the 92 range. Okay. So keep an eye on that one. Now, if you go down to your, say, 10-minute chart, you have a couple levels here in the pound that are definitely worth watching today. Okay. Some demand just below comes in at about 154.80 and about 154.70 on the bottom. So you put your stop, just a handful of ticks below that, 65. So you're talking 154.65 to 80. So 15 ticks on the risk there. And then up here, we have a fresh supply zone that comes in 155.60 to 70. So add 5 ticks, and you're 15 ticks risk on the short side up here for the risk. So again, demand here, which suggests banks are buying the pound down here and banks are selling the pound up here. How many people are new to the program? New with us here? Anybody? Any newbies? Okay. All right. So just real quick, and yeah, let me add stops. Now remember what a stop is. A stop is an order to get out for a predefined loss. That's managing the risk. So if we go down to 75, right there, and then we'll go 5 ticks below the demand for the potential, so for the risk on the downside, right? If we're wrong. And so there's, oops. All right. So again, the base and the strong rally, very little trading here, suggests a big supply-demand imbalance. Strong rally out of the level suggests a big supply-demand imbalance. Right, with our strategy, we buy at the proximal line right here. If we're wrong, we're going to sell at the red line for a small loss. If we're right, we're going to want to get out just before the supply zone. So if the supply comes in at 7 or 60, I would say let's get out at, I would almost go 10 ticks before that. And then we go 5 ticks on the stop. But, and again, what I like are very specific and strict rules. I don't like to do much thinking. Okay? So very little thinking, if any. That's the key to doing this, right? Just execute, don't think. The human brain is not wired to do this correctly. So don't try to, be careful with that. So let's put this at 90, 154.90 on the pound. Go to the up right there. So the blue line's the target, red line is to manage the risk. Now, why get out before the opposing level? We want to get out before the opposing level because let's say we bought down here. We want to get out before this opposing supply zone because what is supply? Really, the definition of supply is competition to sell or something close to that, right? So if I'm going to sell here for a profit, I don't want to sell where everybody else is selling. I want an easier time getting out. So at 155.50, you don't have supply yet. So, I want to sell when price is going up and there's competition to buy. I'll have an easier time getting filled. What you'll notice over time is, most of your winning trades are going to go beyond your profit target. But with that, but that's okay. Again, the goal is not to be in for the biggest move. Okay, there's 2 ways you can do this. You can trade and invest like you want to be on the cover of a magazine, or you can do it in a way that for very attainable, consistent profits. Okay, I like to getting out before the level is going to make it easier to get filled. And yes, if you look at most of my trades, the money trades, most of them go well beyond the profit target. But I really don't care. If I want to make more money, what should I do? Just increase position size, right? The key is getting that consistency down, keeping this nice and simple. Anyway, I think we're set here with the pound. So it's a 10-minute chart, by the way. Okay. Yeah, we can take a look at the Canadian in just a bit. The other opportunity that we have here, let's go to the S&P. So this is going in the wrong direction. We want it to go up, but that's okay. If you look at the chart, actually this morning we had this supply zone here, but we do have a level sitting right up here. This is at 71, and then another level sitting up here that starts at about 73.50. The plan is to combine both of the levels, so that'd be about 71 to 76. That'd be 5 points of risk, or right, $250 in risk per contract for S&P. But what's nice here is you have a nice big profit zone. So we need quite a bit of a rally now to get back there, about 6 points, 5 points. But hey, look at the range the last few days. Not a problem. And it's nothing. Okay? So we'll watch the S&P. If you trade the S&P or the NASDAQ or the DAX or any of those, keep an eye on that one. Let's take a look at one market we really don't look at much here. I kind of watch it quite a bit, is the Nikkei, right? So this is the futures market for the Japanese stock market. I do FT if the setup is there. And I learned that after years of watching amazing opportunities made entry on a Friday and just never come back. And I've seen that happen so many times in the bonds, so we'll take a look at the bonds also. Watch the Nikkei. The Nikkei really plunged 2 days ago. It's come back a little more than halfway from that decline. As we go down to the smaller time frames, we can see the Nikkei is stalling out here. It's been rallying and pulling back and rallying, but if you see, this is the first time it's really coming into an area of supply. So you have that, and you have those two supply zones in the S&P that are a little bit higher. Watch for that. Okay, so this one actually already met entry, but let's see if it comes back into here. Careful with this one though. Your initial profit zone is limited by that little new demand zone there. Yeah, let's look at the euro. Let's first look at the euro futures, and you'll see the levels we talked about, I think, last time, and then we'll go to the euro spot and set up some new trades. Eugene, no, but I would look at the Hang Seng futures if you're interested in. Remember that trading the Hang Seng futures is really one of the only ways to short the Chinese stock market, right? I'm pretty sure even if you lived in China, you can't short stocks. And now, did you see the bans? I think I read this morning they put some ban on people that are holding a certain amount of shares, can't sell for a year or something. Doesn't make any sense though. Okay. Yeah, look, these opportunities, if you're finding these opportunities on smaller time frames or volume-based charts, you're going to be in and out in a short period of time, and you're going for smaller moves, right? And I do plenty of that, but there's also nothing wrong with going for the bigger moves as well. Okay. Okay, let's take a look at the euro. We've been pretty bearish on the euro now for quite a long time, and I think that we stay bearish because that's what the chart is suggesting. We keep declining off of this supply zone here. And let's go down to a smaller time frame, which is not that one. Here we go. So let's put it on a 60-minute chart. So here's a couple levels that we were looking at last time. Prices actually did come down and hit our demand, if you remember that level. And then we still have our supply above that has price has not reached there yet. Just get the chat out of the way. Right here. But we do have a new demand zone sitting below current price. So if you took that trade from last time, great job. That's a pretty big move there. But now we have a new demand zone sitting at right here. Right, 110.85 down to about 65. So you want to stop below that. And then again, this supply zone above looks great. But we're nowhere near that now. We're kind of in the middle, so not a whole lot to do there. Bigger picture, we would still remain bearish because that's what the chart is suggesting. Okay, and now let's go to the spot euro, and we're going to probably end up at the same levels, but let's take a look. Okay, so obviously the charts are going to look pretty much identical. Let's pull up the 60 here. Okay. So again, we have two of these demand zones below. This top one would never qualify for demand. Okay, if you're following our odds enhancers. We do have a level right here, though. There's that one. So that's, what is that? There we go. It comes in right about 70. Okay. And again, the upper level looks great. There we go. Okay, so again, for those that are new to the program, a couple things. One, I definitely encourage you to go back and watch some of the videos, and then you can always read the articles right here. There are tons and tons of articles at tradingacademy.com. Just go to Lessons from the Pros. I've been writing an article each week since late 2006, and I haven't missed a week, so there's plenty out there. And the second thing is, again, for those that are new, why is this supply? We keep saying banks are selling here and banks are buying here. You're seeing the stuff, we talked about last time. Most of it worked out pretty well, but why? How does that work? Well, again, at a very basic level, up here on the supply, prices are trading sideways, meaning there's buying and selling going on, okay? And all of a sudden, there's a decline in price. We're not trying to make money when prices fall there, and we're not trying to predict that that's going to happen at all. Instead, we just let it happen. Prices could have just as easily rallied out of that level. I'm not trying to guess, and I don't really care what it does. But once price does decline away from that level, that tells me for a fact that supply exceeds demand here, right? Why else could prices fall? We could focus on news and Greece and all this stuff, but that doesn't even matter. Whether you know the news or not, it has no impact. Okay, the news has nothing to do. It has nothing. The news doesn't help us at all. The fact is, supply exceeds demand here, and we want to know that. Now, how prices moved away from the level helps us understand how out of balance supply and demand is at the level. How much time price spends at the level helps us understand that. And there are a few other odds and answers that are beyond the scope of this session. But anyway, and the pattern, of course, tells us there's supply there. One of the most important ones is it a fresh level? In other words, since the level has been created, like this demand zone here, has price been back to the level even once? Okay. Now, obviously, for both of these, the answer is no. Meaning, whatever sell orders are, unfilled sell orders are left there, none of them have had a second chance to be filled. That's why we only want to take that first and sometimes second pullback, depending on how deep price goes into the level. Okay? In very basic terms, that's kind of the foundation of the strategy. Obviously, there's other odds and answers, okay, let's move on from here. So that's the we looked at the S&P, we looked at the Euro futures, we looked at the Euro spot. Why don't we move on to take a quick look at the yen? We talked about the yen quite a bit last time. We'll start with the futures. Yes, we can certainly look at gold next. All right, here that's the wrong one. This is the yen chart we looked at last time. Right there. There we go. So if you remember, we looked at this big weekly area, and then we came down to the daily and pinpointed this. And remember we said, look, even though the yen is down a ton, it's probably going lower because of this supply zone here. So price did come up into the level, went all the way into the level, and then turned. But it's okay. Let's now go down to a smaller time frame. And right here. So there's a couple levels here on the 4-hour chart. And remember, for those of you that are, we do bounce around to a few different time frames. Make sure you understand this is very important, especially if you're new. There's no one time frame that's perfect. Understand that this is all one market with one supply-demand equation at each price points. The only reason for looking at different time frames, it's exactly, it's the exact same logic as why, when you get an X-ray, right? Remember anytime you've ever gotten an X-ray in your life? Do they ever take one picture? No, they take multiple pictures. So, maybe you hurt your elbow and you go get an X-ray. You're going to take at least 2, usually 3, maybe 4 pictures. And then they put them up on the board and they look at them. They all look pretty different, but it's all still the same elbow, right? Nothing changes there. So that's the purpose of going to all these different time frames. What we're in search of is, where are those unfilled orders? Where exactly are banks buying and banks selling? Where were banks trying to buy and couldn't get all their orders filled? Where were banks trying to sell and couldn't get all their orders filled? If we look at the yen, we see above price, we have a beautiful supply zone here. Strong drop away from the area. In fact, there's a little gap up here. And as you know, you don't see a gap too often in currencies. And then very little trading at the level itself. That suggests that banks are big sellers up here. And with the lack of demand, so we get down to about 79.80, that's a huge profit zone. There's plenty of room for prices to fall there. And we look to be buyers down here too, but again, we'd be selling at supply up here and looking to buy at demand down here. If it's for a profit target, you want to get out before that opposing level. Make sense? Okay, No questions on that one? Again, that's a little bit larger time frame trade, trading opportunity. If you're looking to make some quick money, or possibly lose some quick money, let's look at a smaller time frame here, right? Here again, the strategy is the same on all time frames, right? You can see here you have supply, and there's your entry point, right? Supply, there's your entry point. Supply, demand is lower. So, again, if you look at them for another one of those where you're kind of in and out fairly quickly, very low risk. This stuff I would be a little careful doing it in the spot market, though you can. And I'd be more comfortable doing it in the futures market. Like, with the majors, just trading the majors though against the dollar. Okay, we have another little supply zone there. All right, so I think we spent quite a bit of time on the yen. Let's move on. Yeah, I see your question there about which one to choose. That's all the odds. That's what the odds enhancers are for. Yeah, we can go to the 10-year, no problem. That's what the odds enhancers are for. Okay. There's a big difference between the Forex futures and the spot Forex. They're different, right? One has a central exchange, one doesn't. The spreads are going to be different. The fees to trade are different. The regulation is different. Let's look at the 10-year. So the 10-year is falling really nice off that weekly supply zone we've been focusing on. That's a huge move already. Again, you're looking at a weekly chart there. Come down to the 4-hour. Well, let's do this on this chart right here. It looks like we're coming into demand right now, which I would say we are. See this demand zone price is coming into? There's that one. So why wouldn't we just be super excited to buy here? Is there any reason? I mean, why shouldn't we be pushing the buy button now? Right, look what's sitting just above. We have supply just above. So this is one of many examples where you'll probably be right in your analysis if you're thinking prices likely to move from demand to supply and back again. But that doesn't mean you have a trading opportunity. Okay? All right. If you're now, look, you can, if you're looking at risk, maybe, I don't know, it looks like about 3-4 ticks there to, to make maybe, what is that? 7? There it is. Okay. Now, I'd almost say, if you shorted supply, now price can go down through demand, but I wouldn't say that yet either because price just touched the demand level, and now it's, in turn. So there's probably still some more demand down there. And this is a pretty big time frame. So watch the 10-year in between these two levels. Wholesale prices down here or demand, retail prices here or supply. Okay, that's the 10-year. Let's go on to another market. Before I do that, though, let me just do this. Yeah, before I forget, I just wanted to put my email address in there. Do you have any questions or any challenges to you know how to kind of get this and get to where you want to be? If you're struggling to meet your trading goals, your profit goals, and all that, or your financial goals, what have you, feel free to send me an email, and either I can help you or I can point you in the direction of someone who can. So just want to make sure we're always there for you. Seiden@tradingacademy.com, and I just put it in the chat. All right, let's go on to another market. Someone look at gold. It's always fun to look at gold. Let's look. Looks like the S&P is rallying. I'm just watching the prices over here, so that's good. We want to rally. We want to get up to that supply. Okay, let's see what we have here. So here are the gold levels from the ones we had in here. Okay, if you remember these. So this one worked out really nice. A gap up into supply. That's doesn't get any better than that. Right. Now remember, and then the blue line is the target. Right, you see that? So price did go on. Did anybody take this trade with us here today? Price did go past the blue line as expected, but then it comes right in the demand zone and rallies. So that's why, for me, it's just always better to get out before that. Yeah, and again, I just saved all the trading opportunities we looked at last time just so we can see how we did. But gold worked out great. Remember, we've been very bearish gold now for about 3 years. And that's because we don't really have any fresh demand until we get down to about $1,000 an ounce, right? We're still a little ways away from that. I didn't think it would take 3 years to get down here from 1900, or 1800, but anyway. I thought maybe a year or so, but it's okay. Still bearish. And but what I want to point out here is, so we keep talking about supply and odds enhancers and all that, but what's equally important is when price comes back into the level, which is where we're supposed to sell short. When you sell here, make sure you know who you're selling to. That's a very big part of this. That's just as important as knowing where supply and demand is. And ask yourself some basic questions. All right, so who are we selling to? Now, we don't know what their name is or where they live or what they like to eat for dinner or anything, right? But let's focus on what we do know. Let's stick to only facts and only things we know to be true. Number one, they're buying after a rally in price. Is it smart to do that buying anything in life? Right? Do you go to when you go to the grocery store and you buy the ice cream, your favorite ice cream, even though it may only be like $2, $3, do you ever go to the checkout line and say, look, I know this ice cream is only $3, but I like it so much I want to pay you $10. Has anyone ever done that? Of course you wouldn't, right? But why is it that that's exactly what people do with their hard-earned money in the markets? So that's a big mistake. Mistake number two is even worse. Not only are they buying after prices move up, but they're buying right into a price level where supply exceeds demand. The chart already told us. Why would you buy at a price level where banks are selling? That's like standing in front of the freight train saying, I can beat it. It's not going to knock me over, right? Unless you're Superman, the odds are not good. You're going to come out ahead in that equation, right? So, but what's another mistake? There's more here. Well, what's another mistake that the buyer here is making? Trend. Exactly, Eugene. So they're buying after prices have gone up, mistake number one, into a price level where the chart already told us banks are selling, and they're doing all that in the context of a market that's in a downtrend. Okay? And not only that, there's more. this buyer here, or these buyers, are not just buying after a rallying price, they're buying on a gap up in price. What usually causes a gap up in price, especially in a market like gold? Some kind of news-driven event. And so the buyers here, they had a chance to buy down here. They said, no, I don't want to buy here. And now the prices are gapping up, and there's a frenzy and all this emotion. Now I definitely want to buy. Okay, that usually doesn't work out very well. So again, I know I'm going into a lot of detail here, but you really need to understand who you're buying from and selling to. Because I can tell you this, your smart competition does know that. And this whole game of trading and investing, it's all just a transfer of accounts from people who don't know what they're doing into the accounts of those who do. And I've been at this for many, many years. Trust me, money always ends up in the hands of its rightful owners. Sometimes people get to have it for a little bit, but believe me, money always ends up where it should. So, okay, I think we've gone deep enough into that. So prices fell, and again, hit the, let's see what this demand zone was like. I remember this one. There's a nice drop-based rally, and with a little bit of basing out of that. And anyway, so now what do we do? Well, where do we go from here? That trade is done. We have to find, if we go to the 4-hour here, okay, take a look at this. Now we're going to need quite a bit of a rally to get here, but we want to stick to fresh supply and demand zones. There's that right there. Notice price almost gets up to this area, but can't. And again, I'm just applying our rules when we're putting these lines in. I guess price does barely touch the level and falls. But again, that's a good odds in the end. That's a clue that says, you know what, there's probably quite a bit of supply there. Okay? All right, so that level comes in at called 1168. Let's be a little on the conservative side. Okay, any questions on gold? I'll go to a small time frame to see if we have any really small time frame setups. Let's look at the S&P though. Maybe we're getting close to that level. Oh, actually, it might be at the level. Wasn't it 2060? Looked at so many charts this morning, I forget. But let's take a look. Remember, this is a pretty wide. Oh shoot! I don't know why I thought it was rallying. Oh, I was just watching the prices. Anyway, it's definitely going in the wrong direction. So our direction was right. What we thought was going to happen is happening. It just didn't come up to our predetermined area of supply. Keep an eye out, though. I know we're almost out of time. Not done yet, but keep an eye out for this area right here. I know it's kind of ugly and all over the place, but if you do get a rally back up to like the 65, 66 area now, you may see a turn there. There's a. Let's just take a look at one more time frame. Yeah, it's an ugly area, but I wouldn't be surprised if you got a rally back up into that area. The prices did fall from there. Specifically, I'd call it 2065. Not, kind of a wider stop. But ultimately, the key, areas we want to enter into are sitting just in the above 2070, 2071 to 76. All right. Yeah, this one right here, is this one you're talking about, FT? Yeah, if it is, so we had that in an earlier session this morning, yeah. So I don't know if any of you were in the trade station session, but this is the one we did use. I'm just not putting it in now because we wouldn't use it again. Okay, so that one worked out really well. Okay. There's that. Yeah, no, we really didn't bypass it. We had it in. It's already used. So that meant entry this morning. So I wouldn't put it in again just because it's not fresh. We're going over fresh levels and fresh opportunities here. That's all. Yeah, I wouldn't bypass that level at all. That was a great level. So here is the Aussie dollar. I don't want to spend too much time here, but I'm not sure when we're meeting again. I know it's on the calendar. I don't have that in front of me. But just this looks far, but either later today or certainly next week. Two great levels on top of each other on the Aussie dollar. We're going to go right here and right here. We'll just combine them and make them one level. It's on a 10-minute chart on a smaller time frame. You'll see it's really nice. So watch this level. I would just combine the two. You're talking, if you add 5 ticks for the stop, you're talking 15 ticks of risk. In the Aussie dollar, that's $10 a tick. So you're talking $150 in risk to combine those levels per contract, just for doing one Aussie. And nice big profit zone on that, which makes it very attractive. Does that make sense? Yeah, crude, there's not a whole lot to look at in crude. Sure, we can take a look over there. We're going to have to go to a different time frame. There we go. Yeah, I really didn't see anything to do in crude at the moment. We need a rally in crude to, we'd want a shorter rally. On the small time frames, that entry point already happened. This 5280 rally was right into supply, so that was kind of the move today. For going into next week, though, we would want, I'll show you. You really don't even have any good demand down here, so we'd want to see either one of two things happen: a rally into supply, which is better seen on this chart right here. So we'd want to see a rally up to, you see I have some nice supply sitting just at the, crude is set up for great trading next week, but we need a rally up to this area right here, or the level above, or a new supply zone will form. But we'd expect crude prices to continue to decline a little bit because, again, you have supply just above and demand is a little bit lower. Right? So there's my email address again, sseiden@tradingacademy.com. If you have any questions, again, if you need some help achieving your trading and financial goals, just shoot me an email. Jen, take a look at the pound, because the pound does have a couple really small time frame opportunities. Again, thanks for your time, everyone, and hopefully that was helpful. I tried to explain all this in very simple terms. And we will see you. I think we'll see you next week or soon. I forget, it's on the calendar. All right, goodbye, everybody.